Saturday, September 27th, 4:09 p.m. New York time. Welcome back, investors, to Winning Wall Street's Money. Going to discuss currencies, including the crypto, US dollar index, and tariffs. Several potential trade ideas are in the process of occurring in the currencies market. I'm going to give you some information verbally, and the rest you can read on your own time on my Patreon page under this video. This is the US dollar index. It's comprised of several currencies. This is offered on one of the United States futures exchanges. That's why the symbol has a dollar sign in front of it. This 5-year chart is a bar chart. Each bar represents a week. The top near the center is the high of 2022. And the bottom left, the low of 2021. See that big range? Look at the big range from the bottom left to the top. That's a markup phase after it came out of an accumulation phase. Down left, accumulation phase. That trend up, the momentum up, the bullish markup phase. This year, the top right, distribution, markdown phase, consolidation phase. Past week made the new low for the year. This was the prior low of the year. And that was the new low of the year. This is a huge consolidation. Building energy, resting, building energy for the next trend, whichever way it breaks out. I'm going to give you some further insight. Public schools, private schools, families, friends, most are not situation aware. Economics, finance, because maybe it's a dull subject to some, and some of us are geeks and eat it up. Some of us realize the importance of it when you start raising a family or get more education or more open-minded. It has a big impact if you're going to live in a Western society or if you're going to live in a non-Western society, but going to be dependent on the Western societies, either government or private sectors. What affects the dollar's value? When the dollar is traded, 3 factors can drive its value, including supply and demand, market sentiment, and technical market data. I discuss those so many times in my videos, sometimes just one or sometimes including 2 more. Typically, when the US bond yields, those are separate videos. Again, most people choose not to educate themselves well on yields. Public sector, private sector, local municipalities, federal government. Yields, very important. Yields, fixed income products is a bigger market asset than stock markets. Okay, typically when US bond yields are higher than those in other major developing countries, again, hear me, typically when the US bond yields are higher than those in other major developing countries, the dollar rises. The US dollar rises. During times of heightened major market volatility, treasury yields tend to fall because historically, US treasuries have been perceived as a safe haven amid uncertainty. To date, the US Treasury Department, the US government never defaulted on paying investors in the US yields. That gives people a comfortable feeling to park their investment capital there, even though they're earning less than saying being invested in stocks or cryptos or real estate. They want safe haven. US dollar is also considered one of the safe haven currencies. Same with Japanese yen, Swiss franc. But again, they have different geopolitical things that affect those. Okay, give you some more insight. I just showed you on the chart the high this year and how it went down. This is a 5-year chart. I've shown longer time frames and other currencies here in the past, comparing them. The US dollar has had its worst first half of the year in more than 50 years, as the financial markets over the last 6 months are dominated by geopolitical crises from the current president's trade wars. Yeah, that probably pisses off a lot of people hearing that because someone's getting blamed. Again, leadership of nations set policies domestically, foreignly, economically, militarily. It all has an impact on the yields and currencies. I'll say that again. The US dollar index has had its worst first half of the year in more than 50 years, as the financial markets over the last 6 months were dominated by geopolitical crisis of the current president's trade war. Think about it. What has changed in the direction, the policy coming out of the White House since they took office? So if you think it's going to continue, then which way do you think the dollar is going to continue? Again, regardless if you're oppose or support an administration, a president, geopolitical party, you could benefit by investing, trading in currencies and yields. Give you some more insights, especially if you've been following my currency videos for the past few years. You probably have much better insight than many other people. The dollar has fallen by almost 11% against a basket of its currencies in the US dollar index. I share those clearly, what's in those baskets. And I explain to those also, there's other basket currency indexes. Yeah, the Federal Reserve one's different than this one. The Federal Reserve one changes a lot more frequently on the currencies in it that they hold. But this index is much more stable. Okay, let me say this again. The US dollar has fallen nearly 11% against a basket of currencies since the start of this year. That is its worst performance over the first 6 months of the year since 1973, and the worst half year since the second half of 1991. Do you remember what happened to US policy with gold in the early 70s and what it was pegged to? And after the deregulation or the change of policy under that administration, presidency back then, was the effect on gold? I'll give you some insight. US dollar, US gold, again, they're controlled by the federal government. Well, all the way back prior to then, gold, the president had set a fixed price on gold. The rest of the planets, the nations did not. You could buy gold when it was at that fixed price per pound in the United States and sell it in the open markets in Europe and maybe have profits. Again, other countries had more free markets. Yeah, that was very interesting when those occurred in those back in the days, people that knew that. Again, there are opportunities even today. Okay. Give you some more insight. This sell-off has pulled the dollar index down to its lowest level since 2022 and lifted the pound, that's the British pound, 3-year high from the start of the year. British pound is the third largest currency in the US dollar index. First being the euro, second being the Japanese yen, and third being the pound. And I'm going to show you those currencies individually. Yep. Currencies, you could trade in the futures market, you could trade in the stock market, you could trade in the option market, or you could have the physical possession of them, which you'll be paying more spreads. The liquidity and the fast able to get in and out in the financial markets certainly is better than having the paper storage in your safe, in a can of coffee, under your mattress, or in your wallet, or wherever else you might keep your currency. So let's again focus right here. and go on to the next. The US dollar index. Bottom left, the low of 2021, accumulation, markup phase, markdown phase, huge consolidation over several years here, running up into the end of last year and doing a reversal this year, taking out the low of these 2 years. Yeah, and then all the way down in the range of 2022. Wow. Now I want to show you the comparison of the yields in US dollar. The 10-year yields specifically. The chart on the left is the 10-year yield, and the right is the US dollar. They are daily charts year to date for the first trading day of this year to the close of Friday. US Treasury yields, that's a US federal agency, fixed assets you could buy, invest in, and they also available to trade. And the derivatives markets in the futures. That's a lot of information, so I'll just leave it like that. At least for some people, it might be frustrated because it's high-tech information. It's not high-tech, it's baby steps. You all have a learning curve. So there's a divergency here. In my go-to strategy, so often is is divergencies. Divergencies. So on the far right, again, the US dollar. Back here, July was the low of the year. And this month, we made a new low. So we had a low, lower low made this year. The dollar. The divergency here is the yields, the 10-year yield, because there's different durations. This is the low of the year. We went down towards it. We didn't test it nor break it. We reversed up. Look at this for a moment. If you have to close one eye or open the other one, look, notice the divergency. Look at the highs of the year, the lows of the year, the trend direction. Right off the bat, you see again, the dollar was declining, the yields were declining. So people that are buying the yields from the high of the year, since then, as the yields declined, they were earning less interest rates on those bonds they were buying. The federal government, we had to pay lower interest rates on those bonds. That's a separate video I have about the US debt. Yep. Also, this past Friday, we made a new record high in the US debt. Enough on that. That's in other videos. Just say again, we have degenerates that operate, that are elected in the legislation, executive branches that make these things occur. Okay, enough on that. Let's get back to it here. Left chart, the yields. The past week, the Federal Reserve lowered interest rates overnight, lending bank to bank. Well, you see here, the 10-year yield on the left, we did not make an all-time new low for the year. We'll continue trending back up off that reversal. I'm going to zoom in again here. Here's that reversal on the left chart. This is a trend down, this orange line, and a reversal trending up. So many speculators were wrong. Again, if you listen to the media and don't check and verify what they tell you, you could get financially ruined. If you listen to politicians, you could get financial ruin. If you listen to steak salesmen, you get financially ruined. If that's your comfortable spot, stay in that zone. That's not my wheelhouse to be concerned about for myself. I'd rather do the extra work and work smart. Again, there's a divergency here. Overall, the yields have been trending down. This retracement right here, midpoint. This red area is midpoint. Broke above it. The trend is still higher high. Historically, on these retracements, The deeper the retracement, the higher probability is when it goes back down, it does not break that low. This is some basic information if you understand yields and Fibonacci's. If we test the 0.618 here, this blue line, even if we go past it, and then when we turn back down and go lower, that means lower probability we're going to break this low. That's a concern because that means interest rates likely will not go lower. Nope. You'll be in a situation for a longer time as it is. So is it the yields leading the currency or currency leading the yield? Chicken or egg, which phrase came first, or how that phrase goes. Understand. Business and politicians make promises to convince the most people. Same with other type of business models too. Walmart, Starbucks, Amazon. Whole other video I mentioned about those because their stock earnings, how they do pump and dump. Again, charts don't lie. People lie. Not all the people. Maybe Gandhi a few times. I don't know. Wink, wink. Don't know. So the point here is this is divergency. We're going to go now into the currencies. Again, on the far right would be the US dollar. I showed you that divergency. Let's go look at what's happening with currencies. Oops. The first we'll do is the euro, because the euro is the largest currency in the US dollar currency. 1 year chart daily. Big difference. They inverse each other. We have the euro currently declining. These yellow bars, they simply mean I had programmed on my computer that we didn't take out the high low of the prior candle. What that means is indecision. The traders, the speculators, uncertain. Well, again, the last day of this month after midnight, 1st of October, if Congress doesn't pass the budget bill, federal government has agencies that will shut down. That will have a huge impact. It already has an impact on currencies and yields. Again, we're looking at divergencies here. US dollar. Nope, did not occur so much here with the euro. I mean, yeah, we made a higher high, higher low. But again, the way things are building here, we'll see. So key levels to look for first in the euro is this swing point. See if we test it. If we break it, that's a concern. US dollar, if we break this, go higher, that's a concern. Key levels. Again, majority of US dollar index is weighted towards the euro. Rough estimate, it's like 57%, give or take. Again, those things change during market hours. The second largest currency in the US dollar index, the Japanese yen. It's declining. It's very close to a swing point right here. That's a key level, potential trade idea right off of that to watch. Watch if we break it. If we break it and close below it. Declining dollar, Japanese yen, second largest currency, the US dollar index makes up about 13.5, 13.75, give it 10%. So big difference than the euro. Again, the euro's trending higher, yen is declining. The third largest currency in the US dollar index is the British pound. Makes up almost 12% of the US dollar index. Yeah, so it didn't make that test. Nope. Notice again, we had the dollar here that made a lower low for the year. Versus the euro made a higher high for the low. Sorry, the euro made a higher high for the year and the dollar made a lower low for the year. British pound did not happen. British pound, when it was going back up, it filled to take out that high as well as tested it. So again, the euro is weaker. Japanese yen is weaker. Did close the inside candle for the week, which again makes sense because I told you what's getting ready to happen the last calendar day of this month. So they're all uncertain. And we did break this key level right there. That was a swing point, broke below that. Australian dollar. It did the same thing, just like the euro. That was the high of the year, and we made a new high. Now we're doing retracement. Canadian dollar. One of the two largest trading partners to the United States, Canada and Mexico. two largest trading partners, if I recall. Well, here's the high for the year. Here's the low for the year. This is a swing point. Actually, look here again. Here's a high year, and from then it declined. So it's not doing divergency. But what it is, broke this swing point here, and it's just shy of testing this swing point. Trading opportunity. So close to the key level. Swiss franc, one of the three safe haven currencies I mentioned, it did do the same thing like the euro. Here's the high, took that high out, higher high, just like the euro, and here. And inside for the week. Mexican peso. It's declining off the highs. So it never went up and retested that. Nope, we took out that swing point. Sorry. Not Mexican peso. The New Zealand dollar. I apologize. New Zealand dollar. Maybe I'll take this off here next time. Not to include it, but the New Zealand dollar. Here's the high for the year. It's declining. We took out that swing point. Big trend down. Okay, this is the Mexican peso. Yep, recently made a new high of the year. Yep, Mexican peso up strong against the US dollar. So very close to retesting the highs. See these lows? Buyers have been buying on the dip and constantly making higher lows. The momentum's up. So key level, we'll see if we're going to get a retest on here if it breaks it. The point is here, this swing point has not been tested. So buyers thought it was a value here instead of buying at lower price. They wanted to scoop it up early. Again, the deeper the retracement, that means less buyers perceive value in it and they want to have a markdown phase. Same with equities, aka stocks. So let's show you again Canadian dollar. Canadian dollar down here at the sweet spot. Mexican peso outperforming Canadian dollar. Now, this is the US dollar Chinese yuan. This is a Forex exchange. It's a currency exchange, but it's not the futures exchange. This is the Mexican peso on the futures exchange. Symbols are different. That's another video I explained. But again, now I'm looking at currencies in a different exchange. US dollar, Chinese yuan. When this is trending down, that's in favor of the Chinese yuan. When it trends up, it's stronger dollar. Here's the low for the year. Yep. And that was the low giving value to the Chinese yuan, and now it's back up. So again, US dollar versus Chinese yuan, inside for the week, but trending back up off the highs. So again, US dollar is getting stronger here, way below the highs, but it's trending up against the Chinese yuan, where I showed you Mexican peso is really strong against the US dollar. Yeah. What media is showing you that? What media outlet is talking about the strength of the Mexican peso against the US dollar? None that I know of. And crypto, Bitcoin. Inside bar for the week. Here's a low for the year. Here's a high for the year. Yep, Bitcoin has been declining. It never tested the high here again. Here's the high of the year. That was a swing point. It never made it. It did a reversal. And very close to the swing point here. So apparently there's been less volatility the past several months in crypto, Bitcoin, than other financial assets. Yeah. That's it for the video. Thank you as always for spending just a little time with me. Thanks for watching.